ladies and gentlemen. I welcome you all to the first quarter of financial year 21 earnings conference call of Minda Corporation. I would like to thank you all for joining us on this call and hope all of you are doing well. The first quarter of fiscal year was an unprecedented period, not only for the auto industry, but for the whole economy. The auto sector globally was severely impacted by the pandemic COVID-19 and continues to face headwinds due to general economic slowdown. The first half of the quarter did not see any activity, and production and sales only started in phased manner from later part of May. This has made the quarter incomparable with previous periods. Now with the gradual opening of the economy, we are able to see green shoots in the certain segment of industry, especially in two-wheeler and tractors. In these challenging times, Minda Corporation reported consolidated revenue from operation of rupees 1,780 million, a decline of 69.5%. We believe this is better than industry numbers, which lesser than the industry's low value. To minimize the impact on company's financials due to significant fall in industry volume, we have taken numerous cost reduction measures, optimism of capital expenditure, and efficient working capital management. There are clear indications of economic activity picking up from June 20 onwards, and we are consciously optimistic of better times ahead for Minda Corporation. This is further supported by the fact that currently more than 50% of our revenues comes from two-wheelers and tractors. Additionally, aftermarket and export are also showing speedy sign of recovery. Minda Corporation continue to remain close to its customers to better understand and meet their requirements during these trying times, which will be explained further by our Group Marketing Officer, Mr. Neeraj Mahajan. Now, we shall begin detailed discussion on financial and operational performance for the quarter. With this, I hand over the call to Mr. Lakshman, our Group CFO. Over to you, Lakshman.
Thank you. Thank you, Mr. Minda, and good afternoon, ladies and gentlemen. Hearty welcome again to the Q1 results FY21. I will take the assistance of the presentation that we have uploaded on the website, and I'll be referring to the slide numbers for those of you who have the presentation in front of you. For others, I will surely read out and explain from the slides that are there in the presentation. Thank you. I'd move to slide number 3 of our presentation to give you a quick overview of Minda Corporation, diversified product portfolio, global customers, very strong manufacturing, advanced R&D, and now more than 6 decades of automotive experience. The items on the left are you're familiar with. We have a 2,800 plus crore revenue. We have 4 business verticals, marquee customers, and 30 manufacturing facilities, R&D capabilities, and our current market cap is about 1,660 crores, 1,660 crores. On the right hand side, we have a revenue breakdown for quarter 1 FY21. You will notice that the outer ring is the revenue chart for the current quarter, which is Q1 FY21, and the inner ring is for Q1 FY20. If you go by geography, you will notice that India contributes now about 80.6% of our entire revenue pie, as opposed to 85.3% the same quarter previous year. I'd like to mention here, therefore, comparison purposes, as well as in line with Ind AS 105, we have made the comparison apples to apples. It does not include the European operations which are discontinued. So without them, our India revenue pie was 80.6% now as compared to 85 earlier. Our Europe and North American revenue by geography has increased from 9% of sales to 12.2%, and our Southeast Asia is increased from 5.7% to 7.3%. More importantly, if you look at the right-hand pie chart, which is by end market, you will notice that the 2 and 3 wheelers have moved up from 51.7% to 53.3% in terms of our entire revenue pie. Commercial vehicle has significantly fallen from 30% to 20%. This includes tractors, and the breakup between commercial vehicles and tractors is 13% is contributed for this Q1 from commercial vehicles and 7% is contributed by tractors. The aftermarket has grown significantly. Last year during the same period, it only contributed to 10% of our pie. This quarter, it has contributed to more than 20% of our pie. Going by business verticals, which is the pie chart on the bottom, the Mechatronics contributes about 43%, and the aftermarket is another 20%. So both included, our Mechatronics plus aftermarket contributes about 63% of our turnover, and information and connected systems contributes about 36.7%. The India Interior Plastic Division is included in this 36.7. As of now, it is a small number. I will move to slide number 4, and you are all aware of the industry situation today, but a quick recap on slide number 4, you will see that overall, the auto industry has fallen by 78.4%, of which the two-wheeler market has fallen down similarly by 78.5%. The industry fell by 78.5%. It will be important to point out here that our two-wheeler business fell by about 69%. And it's significant for us because roughly, as I mentioned, 53% of our turnover in this quarter has come from two-wheelers. Passenger vehicles has fallen by 84%. Three-wheelers has fallen by 76%, and commercial vehicle has taken the largest fall, which is at 87.6% in Q1. Tractors have fallen by 40%. Just a point to note here is that if I had adjusted our revenue to the same mix as previous year, then typically my sales should have fallen by about 81%. However, because of the new mix as well as the fact that I'm more towards two-wheelers and my own fall in two-wheeler has been less than market, our overall fall has only being 69.5%. Coming to the financials on slide number 5, that's the consolidated financials for Q1 FY21. As Mr. Minda mentioned, our operating revenue was 178 crores, which is a 69.5% fall. We have another income of about 9 crores. That's basically the interest income we have on our funds that we have. Our Ebitda negative was at 20.3 crores. This is substantially contained, which I will come to in the next few slides, contained because of our aggressive push on fixed costs, keeping fixed costs down, specifically things like employee cost, other expenses, etc. Our profit before tax was about which was a loss for continued operations, which was 45 crores. And then because of deferred tax credit, our profit after tax from continued operation reported on a consolidated basis is 36.3 crores. We had an exceptional item, we had a profit from discontinued operations of about 90 lakhs, and therefore our final PAT was a loss of 35.4 crores. As we mentioned, our previous quarter's numbers were way significantly different, and so was the same quarter in the previous year, and comparisons doesn't immediately make sense. However, they've all been adjusted for comparing it to related items because, as we said, as per Ind AS 104, our accounts have been restated, and this table excludes our discontinued operations. On slide number 6, we have the chart illustration of the same numbers. However, the commentary is important for us to share with you. Overall, the 69.5% decline in the industry is mainly was cushioned for Minda Corporation because we got a slightly better than industry numbers for aftermarket, which degrew by only about 42%, and our exports, which degrew only by 55%. And this degrowth also is largely because of the postponement of demand and logistical challenges in the business. Our EBITDA decreased because of non-absorption of fixed costs, because you will notice that we didn't do any production or sale for the month of April and for large part of May. And of course, we had an unfavorable product mix because commercial vehicles took a big hit. However, we have come back with very strong countermeasures. We have reduced employee costs significantly, and we have lowered other expenses also significantly in this quarter. If you see our standalone and console numbers, you'll see a big fall in our employee cost as well as in lower other expenses. However, maybe half of it can be attributable to lower sales itself, and at least 30% of that we think we should be able to sustain going forward in the current year, which should benefit our profitability, and number two, we should help lower our break-even point. Our net profit was negative because of course, negative EBITDA, and the other reason our net profit was negative is that on a consolidated basis, we also absorbed a 5.8 crore loss as our share of our joint venture profits, mainly Minda Furukawa, Minda Stone Ridge, and Minda West. If I move to slide number 7, now we have the same numbers but split between Mechatronics and aftermarket in one bucket and information and connected system in one bucket. The revenues in the Mechatronics business came out at 112 crores, which is a 61% drop, and the EBITDA was about 9.8% negative. Of course, this degrowth has a little bit been cushioned by a lower fall in exports and aftermarket, as we mentioned. Our overall fall in EBITDA has also been cushioned largely by various cost-cutting measures. Our information and connected system has fallen by 77.5%. Of course, a huge fall in commercial vehicles by about 80+%. Revenues came in at 65 crores and EBITDA was negative about 14.2%. It's been fairly impacted by the decline in CVs, and also we have had mixed challenges with respect to product mix in the information and connected system business vertical. So that's the overall financial numbers we have. So to sum up, our fall has been lesser than industry, number one. We have been fortunate because of the two-wheeler mix that Mr. Minda mentioned, and we managed to contain our EBITDA losses as about 20 crores because of strong cost-cutting measures that we have taken. The other positive, of course, is we have managed to improve our cash flow position during the quarter in spite of COVID. So that's the positive. And with this, I would like to hand over the presentation to Mr. Neeraj Mahajan to give us a quick update on the business performance, order book, as well as what we are doing new at Minda Corporation. So over to you, Neeraj.
Thank you, Lakshman, for giving a quick number updates. Good afternoon, team. This is Neeraj Mahajan. I'm President and Group Chief Marketing Officer for Minda Corporation. My overview is mainly on two accounts. One for the order book, which I'm going to first talk about. While the entire industry has been, struggling first to come to terms about the volume drops, lockouts. But one interesting thing continued during last quarter was auto industry purchase teams work from home, and we are very fortunate that we have been able to book some very exciting orders during this time. I would just confirm that I would say that this is a very healthy pipelines which we have generated during this time, and let me confirm that this is divided into four sections. Our Mechatronics, which is business vertical 1, information and connected, which is BV2, plastic division BV3, and other and exports. So let me cover the Mechatronics one. The overall lifetime order book during quarter one is close to about 397 crore. This is very exciting for us because we got in this three very large orders. One which is coming in for die-cast from a two-wheeler business customer, and lifetime business in this case is close to about 204 crores. We also receive a very prestigious order for our joint venture partner with VAST from Pune. This is also a lifetime order of about 56 odd crores. And these orders are all coming in now for programs which are either to start in, let's say, 2021, 2022, and so on. The third order for our continued business focus to improve our profitability is coming in on the starter motor and alternator, which is currently, which we have spoken sometime is not supporting us as much, but we have started to see traction there with thanks to the management focus which is coming in and bringing, various activities to not only bring down the cost, but also to improve the quality and engineering aspect of it. So lifetime order there has added about 17 crore odd, and we have very healthy pipelines for RFQs in BV1 further. ASEAN business has started to be a very clear focus for us, and during the number breakdowns you may have noticed, while this has been a challenge now, however, we have clear orders coming in from one of the largest two-wheeler global player, which is about 15 odd crores of business, which is booked during this time, and team has done a great job there. This is a combination of, next generation lock sets, which also conveys that customer is showing confidence in our future technological product, which we are now developing or demonstrating through our tech shows and product exhibitions. On the BV2 side, which is wire harness and sensor division, we got the award for a very large order from leading tractor maker for about 45 odd crores. We also won sensor two-wheeler OEM for a very large or the largest two-wheeler customer for about 180 crores. This is very exciting business award again. And also we got, the next generation cluster activity, which is starting with about 20 odd crore rupees business coming in from north side, the leader in tractor industry. Another instrument cluster for two-wheeler, which is now the new generation instrument clusters. We have started to see the traction. That order is about 15 odd crore rupees coming in from one of the India's most popular two-wheeler company, Indian brand. Now, we also saw a very good traction of about 134 million rupees revenue orders coming in for light-weighting plastic part from largest passenger vehicle maker or engine manufacturer, which is for the combination of passenger and commercial vehicle application. We are excited. This order is something which we were, focusing upon to grow our portfolio for Indian plastic parts, which after KTSN is very important for us to, get traction from our customers. Export is one thing which we are continuously focusing, and I'm happy to share that there are two important developments. One in terms of wire harness, which is for the European largest two-wheeler maker. There, just to highlight a point, which is the wire harness is for Euro 5. So that means customer is accepting Minda Corporation, competency of the product in the future, model introduction. And also, I think I briefly touched upon this point last time. Among the India's largest, four-wheeler maker, we got the, very, very prestigious entrance of our new technical agreement technical agreement partner. In fact, the shark fin antenna, which is going to be, I think, a new, let's say, beginning in terms of Spark Minda's entry into a new product segment. This is about a 50 crore rupees order, and the supplies will start from 2022. What we are doing towards the technology, I'm going to the next slide. There we are very clearly looking at, in the commercial vehicle, we have seen the traction of, the commercial vehicles, especially the buses, becoming more visual in terms of its displays. So our intelligent transportation system architect has started to get good information, intelligence system which is being developed now. And I'm pleased to share that we have already received the trial orders and the supplies are starting on this subject with among the top two bus makers in India for road transport authorities and public transport system. This is something which we would like to expand going forward in terms of our technical competence, which is prevailing on airports, on the railway stations, because government is very heavily focusing on it. It is just a matter of money release from government side, and we are going to partner with them in these areas. That's one area we are also looking at. Also, in terms of our, I'm very excited to share that two-wheeler, we are going to be the first company in the country to start supplying the first keyless entry system in two-wheeler OEM. This is going to be for the first EV, two-wheeler EV maker, and our engineering team from SMIT has developed the components through which we have also patented 21 parts for showcasing our technology. So I think this is very exciting development, and I would like to congratulate my technology team for seeing the research work moving into the productionized area, and we should be able to see the supplies. The SOP has just started, but the volumes are a little bit on the ramp up stage because of the COVID, but we will see those numbers growing gradually on this subject. This is going to be one big development as far as Minda is concerned. This is first keyless entry by any Indian maker, and we are there for this. Design and development on various range of DC-DC converters. We have already got into this subject with two-wheeler as well as commercial vehicle space, and we are right now in advanced discussion also for taking that matter forward with the horizontal deployment across the industry, offering our already well-developed product, which is well accepted and proven. In terms of our assistance, I just mentioned about shark fin antenna of INFAX South Korea. We are now in active discussion, apart from the shark fin antenna, for RF and LT antenna, which is pole type also, to offer to other leading passenger manufacturers, starting from all programs which are starting from FY2021 onwards, so that Spark Minda should be able to supply this high value added product to these customers, because pole type antenna is going out of fashion, and you will see most of the car companies are getting into shark fin antenna from now on. So it is going to be almost a hygiene, if I may say, and we are fully geared up to take care of this part to be offered to all the leading makers in the country, and we have very strong partner in this case. I would like to summarize this on both aspects. Order book for Q1 is very good at this point of time, in spite of COVID, I would say, because Spark Minda team tirelessly worked during this time, assisting customers to close the RFQs. During this time, we could get some breather on the other activities to, convince customers on our unique selling points, differentiators we call it. And on the technology side, SMIT as well as our other engineering members have done exceedingly well during this time, and we are very confident with the strengthening of team, which Mr. Minda will also touch upon or may have touched upon during the call. We are getting future ready on account of our technological push for 2022 and beyond. I would like to rest my explanation here.